Lucid Group Inc. is currently trading at $6.53 per share, marking an intraday decline of roughly 0.48% during the May 5, 2026 session, as the market braces for a high-stakes earnings report scheduled for release after the closing bell today. While the slight downward drift might look like standard pre-earnings jitters, the actual narrative beneath the surface is far more volatile. Investors using platforms like the Robinhood mobile app or conducting their own research on various investing sites are witnessing a massive disconnect between analyst price targets and the cold reality of the current share price. While Wall Street maintains a consensus target near $13, implying over 100% upside, the market has essentially priced in a 13.3% swing in either direction for this evening. This is a staggering level of expected turbulence compared to the historical average, suggesting that today isn't just another Tuesday for Lucid. It is a moment where the expectations of a high-growth EV leader are clashing violently with the reality of supply chain bottlenecks and delivery pauses that have haunted the first quarter. The immediate insight that most traders are missing is that Lucid's Q1 performance was hit by a specific 29-day delivery suspension for the Gravity SUV. While production remained steady, a supplier issue involving the second-row seats forced the company to halt customer handovers, a detail that is going to make the revenue figures look much leaner than the original $470 million estimates. The common ground among investors is the belief that Lucid is simply a luxury car company struggling to scale, but the deeper reality is that Lucid is rapidly transitioning into a technology licensor and a massive fleet supplier. In April, we saw a massive shift in the cap table as Uber expanded its stake to 11.52%, effectively becoming the second largest shareholder after the Saudi Public Investment Fund. This isn't just about selling cars to wealthy individuals anymore. It's about a 35,000 vehicle order intended for a global robotaxi network. If you are looking at Lucid through the lens of individual brokerage accounts or comparing it to the standard Tesla stock or Apple stock trajectory, you might be missing the pivot toward recurring revenue streams and software-defined vehicle architectures that the new leadership is pushing. Comment below how many shares of Lucid Group you currently hold, or if you think the Uber partnership is the only thing keeping this company afloat. The recent stock movement has been a brutal lesson in sentiment versus execution. Year to date, Lucid has shed 38% of its value, a stark contrast to the broader automotive sector, which has seen gains nearing 10%. Institutional activity shows a cautious stance, with several analysts from Fidelity and Interactive Brokers maintaining hold ratings while waiting to see if the company can actually hit its full-year production guidance of 25,000 to 27,000 vehicles. Trading volumes have been inconsistent, often spiking on news of capital raises but failing to sustain momentum on actual product delivery news. The expectation was that the Gravity SUV would be the volume saver for the brand, but the reality of the 29-day delivery pause has created a curiosity loop about the company's true operational health. When you use tools like Schwab Intelligent Portfolios or browse Fidelity ETFs, you see the heavy weighting toward established players, leaving Lucid in a position where it must fight for every inch of market share in a high-interest rate environment that punishes capital-intensive businesses. To understand the current volatility, we have to look at what Lucid actually does and how it makes its money. The company operates a vertically integrated model, designing and engineering its hardware and software in-house at facilities in Arizona and Saudi Arabia. Their flagship Lucid Air sedan remains the gold standard for efficiency and range, but the business model is currently under intense pressure. They are burning cash at a rate that necessitates frequent trips back to the capital markets. The recent registered public offering, which raised about $1.05 billion, is a testament to the fact that while the technology is world-class, the balance sheet is still a work in progress. Past reports showed revenue more than doubling, yet operating losses have remained a constant shadow over the stock's performance. For those engaging in online investing or using the SoFi trading platform, the question has always been whether the technology can survive the transition to a mass-market mid-size platform. Expectations for the upcoming mid-size platform, featuring the Lucid Cosmos and Lucid Earth, are incredibly high. These vehicles are intended to use the new Atlas drive unit to lower the bill of materials significantly. The market narrative suggests that these models will finally allow Lucid to compete in the $48,000 to $50,000 price range, but the reality is that these cars won't hit the streets until late 2026 or early 2027. This creates a massive valuation gap where investors have to decide if they are willing to fund the company's survival for another 18 months before the high-volume models arrive. When you look at Interactive Brokers fees or manage a portfolio through Fidelity Wealth Management, the risk-to-reward ratio for a stock like Lucid is heavily skewed by the persistent need for more capital. The Saudi PIF's involvement provides a safety net, but it also creates a unique corporate structure where the majority of the voting power is concentrated in a single entity, which can sometimes deter smaller institutional buyers. Looking ahead, the future outlook for Lucid depends entirely on the success ramp of the Gravity SUV and the stabilization of its supply chain. The catalysts to watch are the integration of Apple CarPlay and Android Auto via over-the-air updates, which addresses a long-standing customer complaint about the proprietary software system. Furthermore, the expansion of the robotaxi partnership with Uber could provide the volume necessary to keep the Arizona factory running at a higher capacity. However, the risks are just as prominent. Macroeconomic pressures and the potential for increased tariffs on automotive components could further erode the slim margins Lucid is working with. If the company fails to prove that the Gravity SUV can sell in meaningful numbers without heavy incentives, the midsize platform will become a life-or-death milestone rather than a growth opportunity. The contrast between the expectation of a luxury EV revolution and the reality of a struggling manufacturer is where the real investment thesis lies. For those using the Robinhood app or SoFi Invest for active trading, the technical levels around the $5.62 52-week low are critical. A break below that could trigger a wave of institutional selling, while a strong earnings beat tonight, specifically a surprise in delivery guidance, could spark a short squeeze given the high level of skepticism currently baked into the price. In terms of intelligent portfolio management, Lucid remains a high beta play that requires a disciplined approach to risk. Whether you are using Fidelity mutual funds or individual brokerage accounts to gain exposure to the EV sector, the takeaway from today's intraday movement is that the market is no longer giving Lucid the benefit of the doubt. In summary, Lucid Group is at a crossroads where its engineering brilliance is being tested by its operational limitations. The intraday price of $6.53 reflects a market that is skeptical of the company's ability to navigate supply snags and capital requirements. We have seen a narrative of luxury dominance being challenged by the reality of delivery halts and the need for frequent cash infusions. The central insight here is that Lucid's survival is now inextricably linked to its technology licensing and fleet partnerships rather than just luxury sedan sales. The expectation was for Lucid to be the next big player in the high-end market, but the reality is that it is being forced to pivot toward a more diversified, software-heavy business model to survive. As the market closes today and the earnings figures are released, pay close attention to the production guidance for the rest of the year. If they can stick to their $25,000 target despite the Q1 stumble, the reality might finally start to exceed the market's low expectations, providing a much-needed lift to the stock's authority in the EV space. The depth of analysis required for Lucid goes beyond simple price action. It requires an understanding of the interplay between geopolitical funding from the Middle East and the practicalities of manufacturing in North America. For those utilizing online investment tools or the interactive brokers platform, the focus should remain on the bill of materials reductions that management has promised. If Lucid can achieve the radical efficiency needed to reduce the cost of their battery packs, they may finally find a path to profitability that doesn't rely solely on the luxury market. The tension between what the company promises during investor days and what it delivers at the end of the quarter remains the primary driver of volatility. As we move into the second half of 2026, the success of the Gravity SUV will be the ultimate barometer for whether Lucid can truly scale or if it will remain a niche technology provider for larger entities. Maintain a close watch on the after-hour session, as the 13% implied move is likely to set the tone for the entire EV sector for the remainder of the week. This is the reality of investing in high-growth, high-risk technology companies in the current market environment. The margin for error is non-existent, and the requirement for execution is absolute. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, unshare with your friends, bell subscribe for more updates.